I hope you're all having a wonderful weekend so far. Happy Saturday. Thank you so much for being here. Perfect, perfect. Thank you for being here, Harish. Thank you, everyone else, for being here. For today's session, we're going to focus on how you can learn to trade a system that really works, how to read charts, scan, identify, and trade this setup consistently. And this is how I trade, you guys. There are no secrets. Um, there are no other ways that I honest to God trade. This is literally how I trade. And if you have that, you have you have the walking. So once you have the walking, the rest is up to you. The style of the way you walk, whatever else you do, that's really up to you. My goal for this session is to give our team, those of you that are attending and those that will be watching this recording, a system to really trade on, rely on, gain experience, and apply over and over. Um, don't get overwhelmed. We are going to cover the scan, how we can apply what we're using. That way you're going to have a really good understanding by the end of the session to apply what you've learned and actually find setups, and you don't have to immediately trade them, but you can paper trade it. You can watch them for observation so that you can learn, and everything else that really builds the experience afterwards. Um, so let's start off right off the bat. Now, I do want to encourage you guys a little bit, and I do want to show you guys that uh, this is not a system where I have gotten lucky with it and then I have hit home runs and whatnot. This is a system that I apply to trade every single day. And there are a lot of trades that the team does not see that I take that I'm very successful on. And I just shared this example in the Discord. This is my silver P&L year to date, profit and losses year to date. I have made $33,230 on silver this year, and it has only been 10 days into this year. Now, obviously, this does not happen all the time. This is not something where I get this fortunate just 2 weeks into the year. So market conditions have greatly played a toll on this profit, and you're going to recognize those times as well once you get to a good point. Once you are able to apply this system, you're going to deal with all market conditions, and there are times where you might yourself see this. Now, the reason why I'm sharing this with you is because like I said, this is not just a one trade, two trade, five trades, 10 trades. This is probably over, I would say, 300 to 500 trades. Yes, I have done 300 to 500 trades. Is it a lot of trades? Damn right, it is a lot of trades. Yes, for sure, it's a lot of trades. But the point that I'm trying to make with you is that it works. Whatever I'm doing works. And what I would like to do now is show you the chart of SIL. So if I show you the silver chart, right? This is the silver chart. You can see it's very, very messy. It's been going up and down, up and down, up and down in the last 10 days that I've been trading it, right? So this is the last 10 days of the trading, one, two, three. And you can see it's been going up and down, up and down, up and down. So how could someone be successful trading something like that? And like I said, it's because I understand price action. I apply my system, and it does really well. So I'm not trying to boast here. I'm trying to encourage you. If I really wanted to boast, I would have done so in other places and not in this private meeting where there's a limit number of us here. Now, what I want to show you is the actual silver chart on the smaller time frames. If we go to, for example, the hourly time frame, or yeah, let's go to the smaller time frames. Look at what's been going on silver. You see this up and down movement of basically chop, gap, up and down price action. Well, this is what I have made $30,000 on, you guys. So, how do I do it? I'm going to show you in the session, and hopefully, you listen to me. You apply this system. You do not give up. You do not change your thoughts. Remember, if I had changed my system hundreds of times, chasing scanner after scanner or indicator after indicator, chart after chart, moving from one platform to another, I would have never stumbled upon something that really works for me. So, in order for it to stick, you really have to gain experience. As long as you like the setup, you like the view, you like how it looks, I say go for it. Give it the practice, because everything else is really a preferential, and it can always change. You can always go to a different platform while taking the knowledge that you have learned, the experience that you have gained. So, yeah, team, this is a chart that I have made $30,000 on. Now, obviously, this is not what I traded on. I traded on silver futures, SIL, and SIL is a lot more clear, as we can see. And really, the great understanding that came from it is all what we are about to learn here. So you can see futures, it's very, very nice. If I draw a trend line here connecting the highs, you can see it breaks out, retests the highs, and then just continues to advance higher. So this is all mechanical stuff, price action, structure, and you learning this is really going to put you at the top of your game. Now, most of you are part of the mentorship program, so when I do mention that, I hope you guys don't say that or I don't mind it, but what I'm trying to say is I'm not selling you anything. I just want you to know that we have the materials to learn this stuff, okay? That's what I'm trying to say here. So, structures and all that stuff, and this is literally what I apply, and this is how I trade, and this is how I also send out alerts for the team. So, if we go to our swing trade alerts here, for some reason I couldn't pull up my Discord directly on the desktop, so I had to open it on the browser. This issue just happened. I haven't experienced it before. It does happen every once in a year or so. So. Yeah, this is it. As you can see, these trades right here, these trades are coming directly uh, from the price action tools, the strategies that we have learned. JPM trade, you can see, um, we sent out this trade here, worked out really well, and I even described how I took that trade and what made me take it. I explained, and I hope to do the same here, explain to you guys, and hopefully you'll have something that you can have by the end of the day and you can apply going forward. We're going to have more sessions on this in the future, which means more to come, more developments to come, more for you to learn. Uh, just please uh, don't get discouraged and don't get overwhelmed. Just try and take whatever you're learning at the moment, or if you're having a hard time understanding the functionalities, just simply apply them. Okay, add the 200 SMA, add the 20 EMA, and just apply that. Okay, team. Once you do, I promise you, you're going to be very, very well off than before you attended this session. So let's start off with what I use on my or what you will need. Okay, and like I said on the post the other day, you don't need you don't need to really be someone that is, let's say, very serious about trading, and like you have to dedicate your entire day. You don't have to do any of that. This is for the mamas out there. This is for those of you that are over 60, 50 years old, and you sit at your computer for about just a little bit of the day, and you identify the trade, you take it, you walk away, you've made your profit, and you're happy. You go on and spend that money, or whatever you do, you live a good life. I just want to say this is the perfect, perfect, perfect system for you. And I swear to you, it's really simple. Like, I can't emphasize just how simple that is. It's really so damn simple. And I hope that it does stick. So, right off the bat, you guys, what you will need is, or what I do suggest is, you buy a computer. If you don't have one, don't buy the laptop. I know the laptop can be mobile, you can take it anywhere. But the computer, the laptop doesn't really show you a lot of data. And the way that you're going to see it, because the laptop screens are so small, it's going to come out all stretched out, and you won't really see the trend for what it is. You're not going to see a nice visual view of the trend and the data that you're getting. It's very crucial that you do have a computer, or you buy a cheap computer, and you can buy one for 200 bucks, you guys. You can buy one out there, a very cheap computer, the old ones, Dell, whatever it may be, 200 bucks, 300 bucks, and then you buy a monitor, a 20 to 30 inch monitor. Mine, I believe, is I'm honestly not sure. Maybe 26 inches or something. But yeah, you can buy a monitor anywhere between 20 to 30 inches, and that is perfect. That's really perfect. Only just a single monitor. You don't have to have multiple monitors like a lot of the traders out there are having. Just one monitor is perfect. And what you can do is, with my system and my script, and I do want to note, you're going to, if you use Thinkorswim, you're going to have all of that in just one click. So you don't have to add any of that stuff yourself. You can get it with just a few clicks when you do import my script directly in there. So, um, yeah. So, what were we saying here? Oh yeah, you're going to need a computer. Okay, you're going to need a monitor, a 20 to 30 inch monitor, and the rest is very simple. The rest really comes to having a charting platform, and uh, really choosing which one you prefer, which you choose, and applying my system from there. So, what is my system exactly? Here are the things that I use, okay, team? I use obviously this chart here. As you can see, this is Thinkorswim. I use Thinkorswim. There's others out there that use Spider. Spider is really good. There's others out there that use TradingView, which is really good. I like TradingView. The charts look really nice. And there's others out there that use different charts. For example, some may use IBKR chart, some may use Webull chart. I love the Webull chart for a computer. If you're someone that, let's say, works all the time, or is not able to really have that computer set up, and your absolute last resort is a mobile phone, then you can do Webull, because Webull charts, I've personally tried them out, and it's incredible how great they look. And yeah, you can do Webull. So this is my chart here. This is what I use. All right, on my chart, the only thing that I use, that I want you to focus on for this given session, is the 200 SMA line. So the 200 simple moving average line, and the 20 EMA line. What I want you guys to do is, and I really would love and appreciate if you guys do this, so that when you do share your charts in the chat room, I understand your language and I can see exactly the same setup that you're using. So if you put the color of your 200 simple moving average line green, I really would appreciate that. And make the 20 EMA, which is the 20 exponential moving average, uh, white. That would be really nice. Now let's talk about why I use these two. The reason why I use the 200 simple moving average line is because the markets move in two phases, okay? We have the directional phase, and then we have the consolidation, or the sideways phase. And the market itself can be broken down into really three different trends, okay? Let's just say three instead of two. There's an uptrend, there's a downtrend, and then there's a sideways action. Now, there are times where the market will go sideways for a long time, and this is why I differentiated it. But in reality, the market really moves in two phases. You got the directional, and then you got the consolidation or the base forming. So when you break price action down in that way, you're already making it a lot easier for yourself by not forcing trades, by learning, hey, you know what? Now that I understand the market is in two phases, a directional phase and then a base phase. This means that when the market is in a base phase, I'm not expecting home runs. I'm not expecting the market to really perform really well because it's in that base zone. So you guys see what I mean by how this already changes your thought process or establishes you to have discipline and have something to look forward to. Hopefully this is something that you guys can get from the rest of the session. So the market moves in two phases. It goes directional, whether it be up or down, depending on what the larger trend is. And our our function is to buy where price is tradable and where we're going to make profits. Not well, obviously, price is going to be tradable everywhere, and this is what really makes this auction market. This is what formulates this auction market. So the reason why we look at charts is so that we can get the best entries and the best exits amongst everybody else that's also trading that price action. So someone will be buying here thinking, okay, the market is finally breaking that resistance line and it's going to go on a large directional trend. Now, what they will do is there will be some traders that will buy, let's say, short term expirations. And if the market goes sideways a little bit, they get big time screwed. And then there are other traders out there that will say, you know what? Since the market broke out there, just like how it broke out from a zone last time, I'm going to buy a long term, or I'm going to have the trade be based on a, how do I say, on a long, how do I term this better, team? Give me a second, please. The way they position themselves is okay, I'm not trying to catch a short term trade on this. I'm trying to catch the larger picture by going with this trend. So those guys are likely going to be the winners. And who knows, maybe even the short term traders will be the winners because the market has finally broken resistance and their chances of buying short term call options here and expecting it to profit is a lot higher than traders that were buying before that structure was broken. So the reason why I call this resistance level structure is because this is all the market is about. The market does not have a brain, like it doesn't think like us. It doesn't reason. It doesn't think emotionally. It's not emotionally charged. It moves based off of math. And what is math? It's the mechanical structures that are all over price action. You can see them on a macro scale, you can see them on the larger scale. I can take you back to the 1950s and you will see that same level of that same consolidation that basically formulated around here or around here. And take a look at it yourself, team. You can see that was a rally based rally that played out really well. I can go to the monthly time frame here to see it better, and you can see it worked out really, really well. Here's another consolidation there, mechanical support and resistance that worked out really well. So you're going to learn about support and resistance as well. We have, like I said, we have the mentorship PowerPoint that teaches you really how to use support and resistance levels as well. Introduction to support and resistance teaches that, and there are a lot of slides that really teach you how to learn to trade with that trend. So yeah, for now, we're going to focus on you guys just applying what I want you to apply so that you are ready for the next session. You're going to have the 200 simple moving average line and the 20 exponential moving average. So I want you guys to write this down somewhere, take a note, make sure you're going to have a chart with the 200 simple moving average line and you're going to color that green, and then you're going to have the 20 EMA line, the 20 moving average exponential. So this is it's not a 20 SMA, it's a 20 EMA, exponential moving average, instead of simple moving average. Now the reason why I have the 20 exponential moving average is because that particular line represents the momentum of the trend. So first you have the larger trend, right? Remember how I said the market moves into phases? We have the directional, and then we have the sideways action. So what happens is, this is basically the larger trend, and every once in a while, especially if you look at the daily time frame and the weekly time frame, every once in a while the market gets very overbought, and as we get very overbought and far away from the 200 simple moving average line, what will happen is, demand will lessen and supply will increase greatly. And this is because the universal laws of supply and demand tell us when price action is very far away and very overbought, overvalued, there's going to be lack of demand. Demand will decrease and supply will increase. And when price declines, the opposite happens. Demand will increase greatly while supply decreases greatly. So we're going to focus on that as well. I just wanted to show you why I use the 200 simple moving average line. So this is more like the home base, okay? This is the home base where price returns to, or let's just call it the reset of the trend, all right? So this is the reset of the trend. Now let's say this. Let's say the market came down to the 200 SMA line, and instead of reversing back up, right? Let's say price went back down below it and formed a consolidation zone below it. If it was something like that, then that would tell you the market is weak, the uptrending market is weak, and there's a potential that the market is going to go into a bear market, basically a downtrending market. And a lot of times the economy will also back that up, or let's not say the economy, let's just say what's happening in the real world will back that up, and you're going to see why the market is going in a downtrend. Now where others fail is complacency, and this is what this system really takes out of the equation. It takes out that complacency, and it makes you really understand price action in a way that others do not see. And it's very efficient, honest to God, it's very, very efficient. I'm so grateful that I learned this, and this is why I'm putting my own time on Saturday and Sunday to do this session, and hope that at least some of you are going to listen to me, add this to your system, and actually get to work, gain the experience, continue to use it until it finally sparks and you're like, oh my freaking God, how did I stumble upon this? This is absolutely amazing. I literally wake up. I don't try and predict anything. I don't stress out the night before. I get on my computer. I look at the price action and I know exactly what's going on. So this is what I want you guys to also take with you by the end of this session. Obviously, some of you may not catch on right away, and that's perfectly fine. But like I said, you don't need any experience. Just follow what I'm telling you here, and I will fill everything else. So you're going to, like I said, take a note. You're going to add the 200 simple moving average line, also known as SMA, on your chart, simple moving average line, and you are going to also add the 20 moving average exponential, or 20 EMA, exponential moving average, depending on how your platform, how your charting platform words it. It should be either moving average exponential or exponential moving average, same thing. So you're going to have the 20 EMA line and the 200 SMA line. So we talked about the 200 SMA line being more like a home base or like a trend resetter. Now, what is the 20 EMA line? The 20 EMA line is the momentum indicator, okay? So what I mean by the momentum indicator is, if the trend is up and we are holding above the 20 EMA line really well, this tells you, hey, the trend is resuming and the momentum is picking up again for another expansion. Now, how does the market move? Instructor, let's take a look. So we talked about how the market has two phases, the either directional or basing or consolidation, and then there are waves. Okay, so the market has a smaller wave, and then basically a primary wave, and then a secondary wave. So let's take a look at how the market moves in structure. So, like I said, two types of trend behavior. We have the impulsive wave, and I don't want you guys to learn these terminologies. I'm trying to make it as simple as possible. So, you can just say the primary trend and then the secondary trend. Now, if you're in an uptrending market, team, what is going to be the primary trend? The primary trend is going to be the upwards movement, right? It's going to be the move that expands away from the 20 EMA line. Now, what is the secondary trend? The secondary trend is the one that comes back down to the 20 EMA line. Okay, so now, this is simply how trends move. All right, this is structure. This is if you're in a downtrending market, vice versa. So you're going to get, for example, this is a downtrending market. You're going to see the impulsive wave or the primary wave being the larger move to the downside, and you're going to see the secondary wave being the move to the upside, and vice versa. Sorry, and so forth and so forth. So that's how you can identify trends, but you don't have to stress yourself out with that for now. For this particular session, remember, I want you to have the 200 SMA line and the 20 EMA line. When I see your chart, I want it to be exactly that. Nothing else. Don't have anything else on your chart. Don't bother yourself with anything else. Don't trouble yourself with any extra indicators or moving averages. I just want you to stick with those two for now, okay? And now we're going to go into later in the session, we're going to go into the smaller time frames as well on how we can trade that. Matter of fact, let's do it right now. So if we go to the 5 minute time frame, right? What did we say? What did we say just now? We said if the 200 SMA line is sloping up, right? The 20 EMA would be the momentum indicator, or basically the 20 EMA line represents the momentum of the trend. So if the 200 SMA line represents the trend, the 20 EMA line represents the momentum of the trend. If that is the case, team, what do we do here? What do we do? The same understanding that we just learned on that larger daily time frame. Now, on the larger daily, so then, sorry, I shouldn't move too fast. Let's talk about the different trend lines. Sorry, the different time frames. Now we talked about the trend line. We talked about the basically trends, right? Now, in each different time frame, whether you're looking at the 5 minute time frame where each candle represents 5 minutes, or you're looking at this daily time frame where each candle represents one day, there are different trends. However, a trend that you see on the larger picture is always going to be the main trend. All right. So the trend that you see on the larger picture are always going to be the main trend. And whatever you're seeing uh, on the smaller time frames should reinforce that larger trend picture. All right. So now let's do this. If you look at if any by the way, this is a universal language for all platforms out there. Okay, so if you use TradingView, if you use Webull, whatever that you use is going to have those same time frames here. Now these are some of them are preferable preferences, my own preferences. For example, the 1 minute time frame goes back 5 days. The 2 minute time frame also goes back 5 days. The 5 minute time frame goes back 20 days. And some traders, they may have it differently, where the 5 minute time frame will go back, let's say, 5 days or 10 days. They won't want to look at 20 days. But me, I like to look at it for 20 days because I like to see what happened in the last 20 days. I would like to go back to different time frames and see, okay, this is what happened on the day that we lost, where bulls tried to break out and they failed to break out, sold off really, really hard right at the opening session. And as soon as we got below the 200 SMA line, we went down really, really hard. We tested, we went up for a lower high, and then we saw new lower lows to come. Blah blah blah, stuff like that. I basically this is why I go back 20 days. So it's really more of a preference, and that's how I have it set up. But for the most part, you're going to see a lot of charts have the 1 minute, the 2 minute, the 15 minute, the 30 minute, the 1 hour, the 4 hour. So what that means is, if I click on the 1 hour, right? If I click on the 1 hour, this means that each candle here represents 1 hour of trading. So this candle here took place at 5 o'clock my time, 5 a.m. my time, which should be about 8 a.m. for our East Coast traders. And it closes exactly at 6 a.m. At 6 a.m., a new candle starts, and then 7 a.m., a new candle starts, and so forth. So this is what this 1 hour time frame means. Now, on the 4 hour time frame, each candle here represents 4 hours. So this means that this candle here started at 6 o'clock, and it's going to play out until 10 o'clock. For East Coast traders, that would be 6 o'clock, would be 9 o'clock, and um, it ends at 1 p.m. So far, so good, team. So these are the different time frames. Now, what you do as a trader, right? You identify the larger trend. You always look at the daily time frame. I like to look at the daily time frame to identify what the trend is doing. So I want you to look at it in this simple perspective, all right? So the 200 SMA line is sloping up. The 200 SMA line is sloping up, and price action is trading above the 20 EMA line. What does that mean here? This means that the trend is in an uptrend, and the momentum is still bullish. Bulls still have the momentum, and this particular trend will continue to go higher and higher until it cannot, until the structure of the trend changes. So far, so good, team. Now, don't worry. You're going to say, okay, how do I know the structure changed? Well, the way the structure changes is whenever you have a break of structure. You see right here? You see right here, the market did not break that structure. You guys see that? The prior support, the market did not break it, so it continued to go higher. Right here, the market did not break that structure, the prior structure there, and it continued to go higher. Same understanding right here. The market did not break structure, and now it's going higher. So you see what I mean by that, team? Everything is structure based, and when you take the emotions out of it, you're really going to be so freaking solidified on how to trade, that you're not going to need me. That's for certain. But I think you'll still be around, because having a lot of traders, that basically have that, I mean, it's just like anything else. When we're in larger numbers, we have a better collective understanding. One brain is a lot better, sorry, two brains is a lot better than one brain. Three brains is a lot better than two brains. So this is why I think we will always need each other, to each bring in different data, and really provide a different perspective than the other. But I really want you guys to take notes on this, having the 200 SMA line and the 20 EMA, okay? 200 simple moving average, 20 exponential moving average, and everything else you're going to learn on top of that. So now, you guys see how the trend held above the 20 EMA line yesterday? The trend held above the 20 EMA line yesterday, right? And then, sorry, by yesterday, I mean on Thursday. This is Thursday's price action. This is the candle on Thursday. And we can see that the trend clearly held for that session, right? They didn't sell off. The candle is green. Now you're going into tomorrow's session. What do you do when the market opens? Well, you're going to go on your 5-minute time frame, and what you're looking at for this particular session is what? What are we doing? Is the 200 SMA line going to slope up? Well, the 200 SMA line is sloping up really nicely. Are the candles going to get above the 20 EMA line? If the candle is above the 20 EMA line, you do not buy a put. You do not waste your time buying a put, even if you feel like price action is very high on the bigger time frames and needs to come down. We'll talk about that later on. But for this particular session, uh, on an intraday perspective, what you're looking for is the same understanding that we identified on that larger picture with the 200 SMA line and the 20 EMA. And this is what I mean by this makes it very, very, very simple for you. You know what? Let's go to the silver chart and I will show you guys. When I took those 200 to 300 to 400 trades, I didn't just take calls. I didn't just take calls. If I had taken calls, you can see right here, I would have made a crap ton of money. And then right here, I would have lost a crap ton of money. But I didn't do that. I ended up trading the downside the same way. So once we started rejecting below the 200 SMA line right here and so forth, and or even right here, once we basically started trading below the 20 EMA line, um, where the 200 SMA line started sloping down, the candles started trading below the 200 SMA line, and then the 20 EMA line started trading below the 200 SMA line, and candles started trading below the 20 EMA line. That was my signal. This is my signal here to just continue to trade with the trend. All right, team? This is how you make money as a 40, 50, 60, 70-year old just watching the charts. You don't have to trade it all the time. You can miss that one right there. You can say, oh, you know what? That one's a little bit risky. I don't know what they're going to do. Since this is a level of support right there, I'm going to wait it out. That's perfectly fine. Absolutely perfectly fine. You come back an hour later and you see that the market did try and rebound, came back up to that level of resistance, was not able to break that resistance structure. And what happens is we go back down below the 20 EMA line. Now, what is the market doing? The 200 SMA line is sloping down. The 20 EMA line is below the 200 SMA line. Do you guys have that checked up so far? So if you see that, right, this is how you're going to approach it. You're going to look at the 200 SMA line in relation to the candlesticks, okay? If the 200 SMA line is trading, let's just say this. If price action is trading below the 200 sorry, let's back up a little bit. Let's make it more simple for you guys. If you see the 200 SMA line sloping down, this means that you're dealing with a downtrending market for that time frame, for that trend that you're looking at. If you see that the 200 SMA line is sloping up, this means that you're dealing with an uptrending market condition. All right, team? So based on what we just shortly talked about, if the market is in a downtrend, if the 200 SMA line is sloping down, where would the primary move be? Where would the primary wave be if that was the case? You guys remember earlier we talked about that? Exactly, Harish. The primary wave would be to the downside, so you're not going to waste your time buying calls here. It just would not be right to buy calls because smart money is going to sell that into you. Algo systems are going to sell that call option to you, and they're going to collect premiums off of you. So remember, in order for you to make a trade, someone is on the other side of the trade making that happen. They're selling that trade to you. So they're making the opposite bet against you. So you want to always move with the large money institutions, with the algos, which the algos really follow structure. They don't have a brain like us. This is literally what they do, you guys. So Luffy said, but the 20 EMA crossing the 200 SMA also means downside, right? Can we enter puts there? Let me read that again. And 20 EMA crossing the 200 SMA. That's right. So, okay, so what that means, Luffy, if the 20 EMA crosses below the 200 SMA line, this means that the short-term momentum trend is losing the larger uptrend. So you see how the market was in an uptrend here? You see how the market was in an uptrend here with the 200 SMA line sloping up? Once you see the 20 EMA line get below it, this is a major red signal to your calls if you're a long trader. If you're a long trader and you, let's say you bought at that level, you bought at that level with your stop loss down at that wick or right around here, then what should happen is once that trend fails, uh, it should um, it should trigger all of the late buyers out here, or not even term it the late buyers. It should trigger all of the buyers out from there because the market is starting to lose structure. Once you break that level of support, that is it. You're in a downtrend and you're going to continue to trend lower. Now, this is what the mechanics of the trend tell us. However, the 200 SMA and the 20 EMA make it super easy for us to visually see that math and see that structure without having to really know it. So this is why I'm trying to teach you guys the 200 and the 20 EMA line, because that is the start of everything. If you can just add that to your chart, everything else is just experience and knowledge gaining, and it will literally fill everything for you. And it's going to give you one hell of an efficient system, because now after this understanding of the 200 and the 20, I'm going to show you guys my unbelievably simple scanner that I can find stocks every single day and trade. Absolutely phenomenal. Honest to God, I don't know how I came across this scanner, you guys, but I'm so thankful every single day that I'm aware of this, because, man, there was a time in our Discord, if you go back to, let's say, 2 to 3, 3 years ago, we would send out an alert, right? And then what would happen is, like, the whole market is freaking moving up and our stocks is not moving up. And I'm over there like just scratching my head like, what's going on, man? The whole market's moving. Why isn't my stock moving? Like, why isn't our stock moving? And team, that is because other stocks were in their momentum phases with the 200 SMA line sloping up, the 20 EMA line holding really well, printing those beautiful demand candles above the 20 EMA line and getting ready for that expansion, while our stocks were in that phase where they were right here, okay? They were right here below the 20 EMA line, and this is what they were doing the whole time while the other stocks were rallying. And that unfortunately was very stressful for me, and I thought I would never get a hold of this market. I'll never be good at this because it just seems to be such a random thing. But the truth is, it's absolutely not random, and I will show you with many examples here why it's not random, and you guys can hold these examples against me. Well, obviously I don't want you to trade them, but I want you guys to observe it and say, oh wow, this played out like that. This played out like that. We're going to take a look at the scanner shortly as well. But for now, let's focus on the 200 and the 20. So once you see, let's say you're watching intraday price action and you see the 20 EMA line getting below the 200 SMA line, that's a major concern, okay? This means that the uptrend that was the prior uptrend that was in motion is no longer in motion, and now bears are in control. Once the 200 SMA line starts sloping down or flattening and starting to slope down, and the 20 EMA gets below that 200 SMA line, this should enable your signal, okay? That should enable your signal to start shorting the price. All right, team? You're going to start shorting the price. So when price tests the 20 EMA line, you're expecting it to do what? Remember what we talked about, team? How does the market move? The primary wave, the secondary wave, the primary wave, and so forth. And then of course, there are times where, like, you'll get this, right? You'll come to the 20 EMA line, you'll catch a beautiful short trade on it, and now the market is setting up what? The market's setting up a potential double bottom to go for a larger test at a structure up ahead, which would be a resistance level. Or sometimes you're even going to see this, like you'll see this happening. You'll see a move going all the way to the 200 SMA line. And once they reject there, you can now here's what I say. You can definitely enter a trade if you wanted to there, but if you were to listen to me and say, you know what, I want to stick to the very high probability, what you can do is wait for it to come back down, test the 20 EMA line, show that kind of weakness, break down below the 20 EMA, and then trade it. And once you trade it, once you enter there, you're going to target the basically the lows of that day. And a lot of times you should see lower lows if the market continues to trend lower, because that's the structure of the market. As we mentioned, you're going to see lower lows, lower highs, lower lows, lower highs. But like I said, I don't want to overwhelm you with that kind of advanced detail for now. What I just want you to focus on is the understanding of the 20 EMA line. I want you to do this, okay? You get on, let's say you're 65, 70-year old, and you're, let's say you had a really good sleep and you're waking up 2 hours after the market opened and you're watching price action and you're like, okay, the 200 SMA line, you're looking at the 5 minute time frame, you're like, okay, the 200 SMA line is sloping down and price action is right here, and it's currently right at the 20 EMA line, and it's fighting really, really hard to get above it. You continue to observe it, you observe it, and you're seeing these basically clear red candles come in. Once you start to see, basically the point is, team, you're basically, your objective, your trade is to catch the breakdown from the 20 EMA line to get that expansion in. Okay, so you're going to enter a put trade around here and you're going to catch that breakdown from there, and that breakdown should get you some really great profits. All right, team, so far so good. This is how you can trade. You can take a quick day trade, quick scalp trade, and this is literally what I do, you guys. I swear to absolute God. What I do is, like, I noticed this right there, right? I'm like, okay, they're trying to reverse here. Oh, they printed that candle there. What I'm gonna do now, I enter a short trade right here. This is where I enter a short trade, and I enter with, let's say, one or two contracts, and then this red candle happens. When that red candle happens, I skewer my profit down there. I don't even wait for the whole move to play out because I made my profits. I walk away happily. And then you do the same thing again. You're right, Terry. It is easy to see in hindsight, but you're only saying that because you don't have that experience. But once you have that experience, I promise you, you'll be able to take not only 5 trades, not only 10 trades, not only 50 trades, but 100 trades and absolutely dominate. And I have proof of this, you guys. I have proof of this. You can see this is my silver PNL YTD, and this is not a cash account. Oh, sorry. This is not a, what is it? This is not a paper trade account. This is a real account. And I'm telling you, I have done probably around 200, 300, maybe 400, 500 trades done. And I'm telling you, this is how I do it. I swear to God, I swear to absolute God, there's no other secrets. This is what I do to trade. And I mean, take a look at it. You don't have to trade that one right there, Terry. What you can do is you can continue to say, I don't know what's gonna happen here. I'm gonna wait it out. And that discipline is beautiful. It's perfect. You can say, all right, I'm going to wait to see how price action is going to behave again when we come down to that level of support, since the bigger picture is trending up. So if the bigger picture is, let's say the bigger picture was trending up and this is the 5 minute time frame, let's just use our system. The 5 minute time frame is sloping down. The 20 EMA line is clearly rejecting again. You see that candle there, that larger red candle? It's much more, it holds much more weight than those smaller candles there. So once you see that candle, you can short this weakening reversal there. You see that candle, that attempt by the bulls, you can enter a trade there and you'll absolutely bank, because you know how sometimes like traders say this. They say, oh, whenever I enter a trade, it just goes against me. I used to be that trader, team. I used to be that trader. And then when I started trading with the when I started trading with the 200 slow being down, and the five, basically the 20 EMA being below that and candles rejecting that, dude, I started trading with the money and I was like, oh my freaking God, I just made 1,000. Oh my God, I just made 1,300. Oh my God, I just made 500 in 5 seconds. And it just kept piling on and it keeps piling on, and before you know it, you're at $33,000 of profit. And honest to God, this is how I trade every single time. I swear, there's no, like, I can't put into words. There's no secrets. I would not be wasting my time telling you guys this if it didn't work. It's just so beautiful. I don't know how I came across it, but this is I guess I got super lucky, and yeah, I ended up with this system. I mean, if you're looking at charts every single day, and here's the thing, team. I hate uncertainty. I hate having to, and the reason why is because I know I'm not perfect. We humans were not perfect, and especially me. I'm an emotional person. I don't, I may not show that to you guys, or you guys may sometimes see it off of me from the way that I speak in the chat room on the days where the market is very elevated. But what I'm trying to say is, I Yes, sir. Yeah, that is silver. And okay, so based off of that chart that you're looking at, based off of that chart, Harish, I would not be, you see, that right there might be a little bit confusing. You'll say, okay, I don't know if I should buy a call on that, or I don't know if I should buy a put. With this one, what do you do in this scenario? What do you do if that is the scenario there on that 1 minute chart, team? Just to ask you guys, I would like to know what you think based off of this right here. If this is a chart that you're looking at, what do you do? Chris said short. Um, what do you do based off of what we have discussed? I'm really curious what you guys would do, because this is a real life scenario, and I want you guys to think this way, because not everything is tradable. Thank you, Harish. It's not that the 20 EMA line is going down. It's not that the 20 EMA line, the 20 EMA line going down is actually not the issue, okay? Because why? Why? Let's put something into perspective. The 200 SMA line is sloping up, okay? And the 20 EMA line is only the momentum of it. Where can I draw? Where can I draw? What if that was a large uptrend, right? And the market needed to cool off a little bit. What if this was the primary uptrend here and this is the corrective wave? If that was the case, what do we do? Which really is the case. That's what it looks like. And I want you guys to look at price this way. If you see the 200 SMA line is sloping up and we're below the 20 EMA line, you don't really have to do much. JP said, I would short the 20 EMA rejection. Now, here's the thing, JP. This is where traders are getting burnt and burnt and burnt to coals. They're literally getting burnt doing that. I used to be one that used to get burnt by the market. I used to short in an uptrend, and the most embarrassing thing was someone asking you, hey, how much have you made profits in this uptrending market? Imagine telling them that you lost money. Oh my God, dude. Thank you, Charles. So here's what we do, okay? We wait it out, team. If you see this, you wait it out. What do you wait it out for? A reinforcement candle, the same as that one, closing above the 20 EMA line. Once you see that, that's your trade right there. That's your trade right there. And there's a great chance when that next candle happens, they defend that demand candle there, they're going to shoot up. 100%. So the same way, once they regain it, they're going to start doing that. So for this particular example, what you do is, if you see this exact chart, you do nothing. You absolutely do nothing. Okay. You absolutely do nothing. This is not a trade that you take. Instead, what you do is you wait for more candles to form. This is the 1 minute chart, which means it'll probably, like, you can get yourself busy, do something, uh, run a quick errand at the house, and within 30, 45 minutes or whatever, price action will have formulated, and it's above the 20 EMA line, and now it's clearly holding above the 20 EMA line. That's when you buy a call and you bank on it. So, yeah, once it regains the 20 EMA line, now what we have is we have the 200 SMA line sloping up. We have the 20 EMA line trading above the 200 SMA line. And now we have candles, meaning price, trading above the 20 EMA line, which is the short term momentum. So now you're resuming the trend. You're going with the momentum of that market. You're making easy money. You're not really forcing yourself into very hard market conditions where the bid is really against you. That's the worst thing to do. You guys ever feel like it's so hard to get a fill on an entry, on an exit? And yeah, that's one of the main reasons why. So let's take a look at if this particular example failed. Now let's say you continue to watch it, right? Let's just say that you continue to watch this. What happens if you continue to observe and you're not taking any trade because candles are failing to show strength above the 20 EMA line? Here's what you're going to do, or here's what's going to happen. Then this scenario right here happens. Where was that? Then this scenario happens. You see how they tried to get above the 20 EMA line, and then they felt really hard at that level of resistance there. You see how they felt really hard at that level of resistance, now creating a lower high structure. So now what happens is you go back down below the 20 EMA line, and then you sell off a little bit more, and look what happens. The 20 EMA line gets below the 200 SMA line, and look at what happens to the 200 SMA line. The 200 SMA line starts sloping down, and now what do you have, team? What do you have for being patient and really waiting things out? You have a clear opportunity to short with momentum. You have a very clear opportunity to short with the momentum of this given trend. You see them rejecting below the 20 EMA line, you take a beautiful trade and so forth. So yeah, that's exactly how I trade, and honest to God, it works out really, really well. You can see it whenever they come back, they test the 200 SMA line, they show weakness, they go down for more. They just ride the 20 EMA line again and so forth. And if you took a trade right there, you made profit. You took a trade right there, you made profit. You took a trade on that drop, you made profits. Right here, you made profits once they broke down. So you're not going to buy once they go up, team. You're going to buy your put once they break down. Remember that, okay? Now, what sort of expiration date for the put? That really depends on what kind of trader you are. If sorry, let me rephrase that. It depends on where you are finding that setup. If you're finding it on the 5 minute time frame, then you're obviously taking a short-term trade. So your expiration will be around maybe a week out or something, where you just trade it and you get out really fast. Now, there's a lot of times where what I do instead is, like, I still buy long term out. Like, I still buy with plenty of time. And the reason why I buy it with plenty of time is for the durability. And what I do is I still take profit as soon as it goes down. It goes down, it tests a certain structure. If I got in right there, then once it's down here, I'm out. I'm perfectly out. I'm happy with the profits. I walk away. I don't really try. What I'm trying to say is, like, I don't fight. I don't fight where price can catch a bid, and where can it do it? Right at that level. Can you show this on a volatile stock like Tesla? Here's the thing, Mohammed. Tesla is very random. Tesla is absolutely very random, and this is why I don't trade it myself. I just this stock I have a hard time understanding. And don't get me wrong, it probably works out really well, but it's not a stock that I like to trade because it's just very volatile. But I assure you, the same concept applies. If you are, you can see right here, price was consolidating, right? What did we mention earlier, team? We said the market moves in two phases, right? We have the directional phase here, and now we have the base forming. So inside of that base, price action is going between these two converging lines, as we can see. So let me remove that, those two converging lines. Oh, so if I draw those two converging lines, we can see once price action starts, first of all, the 200 SMA line is already sloping up, right? But what is not lining up on that chart there? What were we waiting for, team? What were we waiting for on Tesla at that given moment? We were waiting for the 20 EMA line to start getting above the 200 SMA line. Exactly. Thank you, Charles. We were waiting for that slope to rise. And how does the slope rise? They need to take price action up. So you can see once the 20 EMA started to really slope up, this is where candles started showing their reinforcement, basically where that demand candle was now reinforced by that this demand candle was reinforced by that demand candle that was placed there, and now you have a solid trend that is rising up. And I know you guys will say, why did price action decline there? Like I said, all of those questions, you're going to have your answers to once you learn further price action. So, what I mean by that is like, then you start to learn the advanced stuff. You look at the bigger time frames and you're like, wait a minute, that's at a level of resistance. And I remember one of our fund members sent me a message asking me if he should long Tesla right here. And you know what I told him? I remember this because he asked me about it. I told him, "Hey Harry, the market right now is uh, very uncertain. It doesn't know what to do. And even though Tesla is showing a lot of strength, there's a great chance that this particular breakout is going to fail with bulls going down to collect liquidity." And believe it or not, that's exactly what happened. Now, the reason why I said that is because Tesla was trying to break out at a time where the market was not permitting it. And if you are and here's another thing that I love about the 20 EMA line, you guys. This is why I freaking love this, because when we expand away from the 20 EMA, I do not chase up here. I do not chase up here because if you go back, price always, always, always loves to come back down, retest the 20 EMA line, and then advance higher. So if you see price action extended away from the 20 EMA line, that is not a buy, okay? That is not a buy. When are you going to buy the hold above the 20 EMA line? Anybody? Here's where I want you to buy, okay? Right here. Right here. You see when bulls place that bullish engulfing at the 20 EMA line? This is where I want you to enter the trade. Understood, team? Now let's go over more charts. Let's go over some of the stocks that are showing up on my scanner. So you see this particular chart here. Now this chart showed up on my scanner. It's up 8.8% and it printed that massive demand candle there. Now, am I going to trade that? The old me would have probably taken that trade and they would have got burnt. But no, 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 no. I don't fall for that anymore. What I do instead, I go to another stock and I try and find setups like that. You see what I mean by that, right, team? So earlier we looked at a chart on the 5 minute time frame, on the 1 minute time frame on SIL, and this is what the setup looked like. We were right here. You guys remember the one Harris shared? So this is the chart, the one Harris shared. So you see how the 200 SMA is sloping up and the 20 EMA line is extending up, but then we come down. You see how we come down and we're below the 20 EMA? Now, I told you guys, I asked you guys, hey, what should we do in this particular scenario? And some of you said to short, some of you said to buy. And there was, I believe, Charles that, or one of us said to wait it out patiently for price action to get above the 20 EMA line to line up with the 200 SMA sloping up and price action trading above the 20 EMA. Now let's take a look at how this would have played out in actual trade scenarios. You see right here, we did have a large trend, right? So the trend began here, extended all the way there, and then the secondary trend took us down to that prior breakout right there. And what happened there was we slightly went below the 20 EMA line, just like Harris's example here, as we can see. Now, in this example, when that's happening, what do? We do not buy right there, okay? We wait patiently because if they wanted to go up, I promise you they will show you. And you can see right there, they printed a massive demand candle above the 20 EMA line. This is where you buy, okay? This is where you buy. And here's the same example again. And keep in mind, this chart is not on the 1 minute time frame here, where each candle represents 1 minute, like 1 minute, like Harris's chart. This chart is on the weekly chart, meaning each candle represents 1 week. By the end of Friday, you saw this candle, or by mid Friday, you saw this candle, and you said, you know what? I'm going to enter a long swing trade. Now, given that you're identifying this on the weekly chart, the way you're going to trade this is you're going to buy call options 6 months out, okay? You're going to pick up call options of LEN stock here 6 months out, and look at how this goes. Week one, this is what happens. Week two, this is what happens. You're already up a really, really great amount, probably around, by that candle, you're probably up about 70, 80, 90% there. And then you wait it out, then this happens. Now, this is where you close into the rally. Once you have made a higher high, you get out of your call options, and you're also getting out for another reason. Why is that, team? Can anyone tell me the advanced question here? Why do you skew profit there? What is the logic, or what's the purpose of skewing profit there? If you guys understand this, that means you understand the engineering of the whole 20 EMA momentum being. I don't want to say it, but I want you guys to see if you actually have any. Take the cash and run. Weak, not weak. I think it had strength. Skew profits, but why? Why? Thank you, EJ. Thank you. It is away from the 20 EMA. Remember what we said? We catch the bid at above the 20 EMA line. It extends higher. This is where we get out, okay? The higher high has already been made. And after a higher high has been made, the market is going to do two things. It will either go sideways because the trend is way, way too powerful and doesn't want to go down. It'll go sideways for 5 to 7 to 9, 12 weeks and then go up again, or it will just pull back again, create another higher low structure at that resistance level, regain the 20 EMA line, and then go further higher. You guys see how I use this system, why I love it so much? Because it tells me, hey, don't mess around right here because we're too far away from the 20 EMA line. Now compare me to another trader that doesn't have that understanding. They're going to pull their hair out and blame themselves, basically say, oh, every time I enter the trade, they'll turn it into an emotionally charged approach. Every time I enter the trade, this happens or that happens. What they don't know is that this is how mechanically the market moves. And unfortunately, if you enter right here, you become that liquidity that the ones that caught all of that bid right here can sell into. That's what creates the market. So this is why I really love this system. And this is on the weekly chart. Now, let's go to a different chart. And what we're going to do is we're going to take a look at the daily time frame. Now take a look at this chart. AMAT Applied Materials. Obviously, I have not traded this particular stock, but to show you guys some of the areas that I would be trading, it would be that bullish engulfing candle there. It would be this candle right here. It would be this candle right here. So, do you see what I do? I basically ride the 20 EMA higher, the momentum of the trend higher. The 200 SMA line is sloping up. The 20 EMA is above the 200 SMA line. And that simple, team. That simple, I want to focus on for this particular session. All right? I just want you guys to add this to your chart because, oh my freaking God, man. And then we start to add our scanner. I don't know how I learned the scanner. That's the one that really I'm so thankful for because it was the icing on the top. Now here's how I use my scanner. Um, every single day, and for my scanner, I have two simple things. Okay, I have the percentage change. So I have the percentage change and then the net change. The net change, I never use it. I only use it to see how much that stock is up in dollar value. That's it. The way that I use this particular scanner is, for example, I'm looking at the S&P 500 stocks. I can look at anything else. I can look at Nasdaq stocks if I wanted to. I can look at the nice stocks. I can look at anything I want, whatever that scanner may be. I particularly favor trading the S&P 500 stocks, and this is why I have that scanner for us. At least for trading with the team, I like to trade the S&P 500 stocks because it kind of takes away all of the other bad stocks with less, liquidity and all of that stuff. And for a stock to be part of the S&P 500, that means they would have to have met uh, strict requirements of filtration. And this is why I traded. So, um, Tyler's like, I just got here. Did you already do an analysis on SPY? Not yet, Tyler. We'll do it shortly at the end. But for now, we're focusing on the scanner. So for the S&P 500, for this particular list of stocks, basket of stocks, what I do is I click the percentage change, put it in order, make sure the highest shows up at the top. And this is my scanner. So what I do is every single day, team, every single day there are different list of stocks that show up on the scanner. What I do is like I just go through them, okay? I go through them and I put, you see this one right here, I wouldn't take that trade because why? Why would I not take this trade here, team? We're below the 200 SMA line is still sloping down, and we're below the 20 EMA line. Sorry, the 20 EMA line is below the 200 SMA. So again, I can take this trade because I do see demand coming in, I do see volume coming in. But the thing is, for my high probability trade to really go with the momentum of the trend and not be part of any force that acts against it, I'm simply going to move on to another setup that has that type of setup. So if we take a look at this particular setup, what do I always tell our team? What do I always tell us? I always tell us to buy the bullish engulfing above the 20 EMA line. Now let's identify the bullish engulfings on this 20 EMA line. You see that one right there? That would have been a really, really great trade. So what I'm trying to share here on my scanner is that there's no absolute way that when you go over the scanner, you're not going to find something that is rebounding just at the 20 EMA line and that is ready to go on its expansion. It's impossible not to find at least several that you're going to find that are high probabilities. And this is my mission. This is what I want to show you guys. This is the money maker. This is what I want Harish to do. I want Harish to literally spend 10 to 15 minutes a day after work. Okay, he comes back from work or he comes back from practice or from Tai Chi practice. He's at home now and he's resting up and he's like, you know what, let me get on the charts here for 10 to 15 minutes, go over the scanner And what I do, team, is like I just click. You know how your keyboard has the up and down button. I just click the down button. I go down the list like this, one by one. I go down the list. I go down the list until I find setups that I like, that are just getting ready for that kind of expansion. So WDC, if you take a look at WDC, it almost printed a bullish engulfing. So not entirely a bullish engulfing. It could be a potential watch for a day trade to buy on Monday and make nice profit on. But let's continue to go. Let's take a look at this one, KLAC. KLAC came back to the 20 EMA line, didn't exactly touch it, but it's still printing a bullish engulfing that could provide another green session. Let's keep on going down. You guys remember MU, right? When I shared that MU trade with the team? Matter of fact, let me back it up with some examples so you guys can see this is not something that like the trades that I alert, they're not something that I just say, oh, I think this one will do good. No, it's actually backed by, um, let's take a look at, where's that MU trade? I think I may have shared it in the weekly watch list here with the team. So, oh yeah, we'll take a look at on. Look at on, team, on. Okay, let's take a look at on. So I shared on with the team, and I shared the June 65 call at 4.70. So let's take a look at on here. Look at it, team. Just look at it. Look at it. Above the 200 SMA line, above the 20 EMA line. And I said, hey, team, this is going to be good because it's starting to hold above the 20 EMA line. And look at how well it played out. It played out really, really well. Really well. And now it's above, yeah, it's far away from the 20 EMA line. So yeah, we would want to sell it here, and we would get back in once we have a matured consolidation from this, a matured either pullback, corrective wave, or consolidation, and then we could trade it again. But yeah, this one we absolutely made bank on. So let's see. I think I alerted on for the team. On. There's on the alert, and you can see we absolutely banked on this setup here, team. It worked out really, really well. Let's take a look at MU. Let's go back to MU here, and if we go back to MU, if we go back to MU on the weekly watch list, where MU, where is MU? Sorry, team, give me one moment here, please. I'm not, like I said, I'm really not trying to, uh, I'm not trying to show off or anything. I'm simply doing this because I want you guys to see this is how I send out charts for the team. You see right here, I said MU stock made. So I said blah blah made great profit on Friday, and here's what I said. I said. Breakout momentum, expecting it to see more green candles this week towards the 270s. Look at the setup. It was above the 20 EMA line right here. Once we saw that bullish engulfing above the 20 EMA line, we entered that trade, and boom, look at that beautiful rocket move. Absolutely beautiful expansion higher. Same understanding. I'm telling you guys, this is a high probability that you can really bank off of, you guys. You can really bank off of this setup. I'm telling you. If you and the thing is with the scanner, you're always going to find setups. We'll keep going. Look at this one, LMT. With the whole war starting, right? We got that bullish engulfing right above the 20 EMA line with the 200 SMA line sloping up, and that led to a major expansion. We can go over, oh, this stock, MLM. Look at MLM, you guys. MLM held above the 20 EMA line, printed a bullish engulfing demand candle above it. This is going to expand higher from here, MLM. Let's take a look at other. Now this one, oh my God. Who was in the live trading room yesterday? Anybody? You guys, who was in the live trading room yesterday when we saw that massive demand candle there? You guys remember 2 days ago we were in the live trading room on Thursday, and I was talking about consumer discretionaries, and I kept mentioning lowies over and over. I told the team that I was going to do research on why these consumer staple stocks are showing strength. And we'll talk about that shortly as well. But you can see above the 20 EMA line, if I had alerted that for the team, this would have done really, really well. Um, so this is honest to God. This is how I trade. You wait for the bullish engulfing above the 20 EMA line and you catch the expansion away from it. And like I said, there are always trades, always newer ones popping up. Look at this one. It's a little bit overbought away from the 20 EMA line, but it still is going to see more expansion in the upcoming week. Um, let's keep on going. Someone mentioned AVGO. Harish mentioned AVGO. So now here's AVGO team. What do you do for AVGO here? What do you do? What do you do in this particular setup here, team? Thank you, Charles. Thank you so much for participating. You see that, team? You wait for confirmation. You don't buy it here, although it looks good. Although it looks like Bulls got the chop, right? You see, we had a bearish breakdown candle, and then Bulls. This is called a bear trap. It's called a bear trap because they print a bearish engulfing, and then the next day gaps up to 337, and Bulls step in. It's called gap and go. They gap up and then they go and close far above the opening of that. Sorry, the high of day of the prior day, and all the bears that are trapped now are going to cover really aggressively the higher it goes. So for this particular setup, this is what you're going to look for. Once you see a demand candle back up above the 20 EMA line, that's your green. That's your green signal to trade. That is your green signal to trade, and you're going to make bank off of that once the trend does enter its correct. Its main uptrend and continues to go back up higher and higher, just like MU did. So yeah, that's pretty much how I identify setups using this scanner. And it is as simple as having the percentage change move. Why do I have that? Because I'm looking for large movers that led that day session, and then I'm looking at their charts to see if it lines up in that scenario where it's riding above the 20 EMA and it's getting ready for that expansion. So far, so good, team. So far, so good. And yeah, that's really it. If you look at L, we talked about L as well on Thursday, and look at it. It printed another strong hollow candle, and it just looks like it's going to see more upside. Look at this one, team. LHX. Consolidating, finally got back above the 20 EMA line, printed that bullish engulfing, and then printed those massive moves. So this strategy here, this system, is so absolutely freaking great, where we don't waste time on the, like, we don't waste time down here. We don't waste time. We don't know what the hell's going to happen. If we say, oh, I'm going to buy it here because it's cheap, who knows? Maybe they're going to go down for more liquidity where there's a stronger demand inside of that smart money demand zone. You see that smart money demand zone. And team, as you get more advanced with price action, you're gonna get really good. You're gonna get really good. This is a smart money demand zone, and what a smart money demand zone looks like, without taking too much of your time, this is what it looks like. Let's see if we have. There it is. So we have a rally base rally, and this is what this stock did: rally, base, rally. And then what happens is price goes back down to where the prior demand was, and this is where you look for a demand candle reversal at the retest of that zone. You're going to enter and you're going to bank off of that smart money concept backtest buy signal strategy at the demand zone. But yeah, once you learn more price action, it's really beautiful. Makes trading a lot more simple. And team, that same understanding. So right now, we're looking at charts where each candle is Each candle here represents 1 day. We're looking at it on the daily time frame. If we go to the 5 minute time frame, it's exactly the same concept I apply to intraday time frame. So if we take a look at this chart here on the S&P 500, before we look at this chart, team, what were we supposed to find on the prior examples that I was showing you on the daily time frame? What were we looking for? Do you guys remember? Just to go back and review that. We were looking for what kind of candle at where? That's right, Robin. We were looking for that kind of like prices being on that corrective wave, coming back to the 20 EMA line, and right at the 20 EMA line, printing that demand candle there, that bullish engulfing. And this is on the 5 minute time frame, meaning each candle represents 5 minutes from the opening of Friday session to the closing of Friday session. If we take a look at this chart here, team, what are we seeing here? What did we see right here? A nice demand candle back up above the 20 EMA line, right? Do we all see that? Now, Terry mentioned something about this being in hindsight easy because we're looking at the chart. What I want to do for this particular trade, I want to go back. I want to go back to, let's see if I can, bear with me here for a second, okay, team? Now, I shared only one SPY trade with the chat room on Friday. And what I would like to do is I would like to show you at the exact time that I shared. Give me one moment, please. One moment, please. All right, so this is yesterday. This is yesterday's chart. Um, and oh, sorry about that. There it is. So what I want to show you guys is at that exact time yesterday, I shared something without even sharing the chart, but you can see how I trade, you guys. This is literally how I trade. At there it is. There it is. You guys see that at what time? 7:51 a.m. You see 7:51 a.m. my time. I'm in the West Coast, so 7:51 a.m. would be 10:51 for our East Coast traders. Now, if we take a look at the timestamp at the very bottom right here, I want you guys to look right here, right here. At the very bottom of that timestamp, you see 7:55 a.m. You see that? 7:55 a.m. right at that 20 EMA line. Here's what I shared about SPY. At that time, I said, what do we think about SPY calls here on this pullback? Obviously, I did share my concern as well. I said my only concern is the dips haven't been bought lately after the rallies. They might just keep flushing given the ruling uncertainty. So the ruling uncertainty is referring to the Trump tariff decision coming out from the Supreme Court. That can bring in a lot of uncertainty, but under normal market conditions, when you find these setups, I promise you they will work out beautifully. So you can see I said above 692.30, that's a long trade on SPY with stop loss at 691.71. If they come up to that 692.30, I'll take a call. Let's go to 692.40. 692.30. I mean, you see that, team, right here. Right here. Right here. This is 692.30. And look at that. It provided a beautiful trade of 2.5 candles, just absolutely beautiful profits. I'm telling you, this is not something that that I'm just sharing with you and then I go and like, no, this is literally how I trade, team. It's how I trade. It's how I make these trades happen. And I do very well for myself, and I really wanted to share it with you guys so that I don't see Tyler buying puts on this day when the trend is clearly bullish. Um, and I don't mean nothing to Tyler. I love Tyler. I love Tyler more than you guys because I really want him to succeed, and I really do enjoy. Tyler's funny, man. I like Tyler. But yeah, I this is how I trade, honest to God. And then again, team, let's say you missed that particular trade, right? You missed that particular trade, and you don't want to be chasing up here, right? You don't want to buy it up there. You wait for them to come back close to the 20 EMA line or touch the 20 EMA and then print another bullish engulfing candle. You enter on the bullish engulfing candle and then you go for another expansion. So now here's what I want to say. I want to add two things, okay? In regards to time frames, for those of you that are, that are already trading, you don't enter as soon as the candle happens in the first minute. You know how this candle is on the 5 minute time frame, meaning that it takes 5 minutes for the life expectancy of this candle to complete. You do not buy within the first 1 or 2 minutes. Do not make that mistake, okay? Do not absolutely make that mistake. You're going to become liquidity, especially during weakening market conditions. You wait, you watch the candle for 4 minutes, and then in the last minute of the candle, this is where you enter. All right, team? Sometimes you could even honestly, like, you could even wait a little bit more and add once it goes down. I here's the thing. If you do that, you better have your stop loss even more firm than the traders that would pretty much enter on that candle. So what I'm basically saying, right? If you do that, your stop loss better be very strong because you're taking a little bit more risk of, let's say, all right, the setup is potentially failing and I'm entering. That's what I'm trying to say. It's a bargain. It's a, how do I say? Um, it's a it's a scenario between this setup may potentially fail to also I'm getting a cheaper discount on this potential on this little pullback before it goes up. So if you're getting that cheaper entry, you're technically, how do I say this? You, you're gonna take a smaller stop loss. That's for one. So that is the reward. I know the cons is that you're entering on a potential failed setup because the bullish engulfing is getting taken out, but not yet. So it's a potential. So you're taking a potential risk after this a setup has already kind of failed or is showing to fail. But your reward is coming in from the fact that your stop loss being right here or right here is tighter and you're not going to lose as much as, let's say, somebody that entered as soon as the candle was closed and they dealt with that pullback. So you guys get what I'm saying here? Now, if you enter on that bullish engulfing candle, where's your stop loss? Sorry about that. Where's your stop loss going to be? Your stop loss should always be 1 penny below that bullish engulfing candle. Once they take it out, you cannot, under any circumstances, remain in the trade. If you remain in the trade, there was no, like, you're standing on you're standing on a failed scenario. You're now bringing back the emotional hope and dope stuff and all that, and that never goes well for trading. You may get saved a few times, but it's gonna go wrong at the time you need it the most. And I just want to finish it at that. So yeah, that's how you take the trade. And now let's say you go back, right? You watch price action, you got a really nice rally. The second thing I wanted to add, the second thing was when you catch that beautiful trade and you're already up an amazing profit at that level, take it. Take the profit and walk away, especially if you are in your first year or two. Take the profit and walk away. You made some nice profits off of that scalp trade, that day trade. Walk away. Take a nice break for the day and so forth. Obviously, you can keep it longer if you would like. I'm not telling you how to manage your trade, but I'm saying in the first few years, because confidence can override your it can basically over confidence can add to your overwhelming emotions. um, it may be best for you to just secure profits right away and focus on the learning aspects, and then later on, as you get more experience, then you can start to keep longer. But yeah, then again, you see right again about this was at 8:35, and then right around 10:25 again at 10:25. The market pretended like it was gonna crash. It basically was gonna sell off all the way down, and then it just did a maneuver like, oh, psych, I'm not going down. Printed another beautiful demand candle right at the 20 EMA line. What do? You enter another call, you absolutely bank on it, you guys. You absolutely bank on it. Now, for scalping, I say always secure profit after basically after at the end of the second candle, or so either at the end of the second candle right here, or at the beginning of the third candle. So a lot of times what will happen is like this candle happens really really fast and it'll go up a lot, and then you if you get out right there, the second candle also happens really fast, you get out and that candle might sell off. This is why you want to sell into the third candle, because a lot of times it may wick back down. Like if you're at a resistance here, right, you see it came up and then it did go down, but of course it came back up because the trend was still getting dip bought. um, but that's how I trade. So far so good, team. Should we end the session here? Or is there anything that we need to cover? Let me see. Let me see. We talked about the scanner. And like I said, with the scanner team, it's very easy. Like I can take a look at other stuff. I can look at the NICE. Let's go to the NICE. So where's NYSE? Let's take a look at the nice stack. So nice stock. So this is like 1,000 stocks or something, all part of the New York Stock Exchange. And now let's apply the same understanding. Look at it, team. Same understanding. Where do we buy? Where do we buy? At the 20 EMA lines right here. Beautiful trade provided. That supply candle was taken out. You get in right at where the supply candle was taken out. Another beautiful trade. You see that consolidation there that took place. They printed that bullish hammer candle. Beautiful trade. That also counts because you can see they get very close to the 20 EMA and demand overwhelms it all the way back up above the consolidation. That tells you they're building liquidity to go higher, and that's exactly what they do. And that's a random stock I chose. So you can see this is a blueprint, right, team? This is a blueprint. It's a blueprint for other the New York Stock Exchanges. It's very illiquid. A lot of the stocks are very illiquid, so that's why I don't really look at it. But I just wanted to show you guys, no matter where you go, you're gonna see the same things. Let's go to futures, okay? Let's take a look at all of these futures here. Same understanding. You see, why was Friday a bullish day for silver? You could have kept it very, very simple, right, team? And as soon as every time they got above the 20 EMA line and they held it, you see right here. Let's go right here. You see right here, they held above the 20 EMA line. Is that not a bullish engulfing on the 5 minute time frame, team? So if I enter right there, right? If I enter right there, that is at least, if I enter with one contract, if I enter with one contract there, that's at least that's where is it? Where was it? Where was it? That's at least $300 on that candle, on that second candle there. And then again, you see right here, printed another bullish engulfing, another massive candle. Why is it? Why is it that the green massive candles are happening exactly at the 20 EMA line? Tell me that. Tell me that. I don't know. I've been observing for 7 years, and I freaking love this, man. And yeah, it's absolutely amazing. You can see right here another bullish engulfing, another bullish engulfing demand at the 20 EMA line, another beautiful trend, and so forth 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 until the trend finally loses. You can see you get stopped out, you walk away. But then look at how many succeeded before one was stopped out. You see what I mean, team? And please do not be don't be emotional if they fail. Just because one trade fails, imagine this, right? Imagine you're a trader where you took your first trade and that trade failed for you, and now you abandoned the system while another trader didn't abandon it. You would lose out on a really powerful strategy, whereas the other trader did not. Can you show some bearish examples? Well, the market has not particularly been bearish, but if we go back, let's take a look at silver down here. This is silver down here. You see, this is the 5 minute time frame, right? So silver had a few red sessions, if you guys remember. Now here are the days the stock was in a red session. It went from an uptrend and then down to a downtrend. Same understanding. You see, once what how do you identify the bearish setup, Luffy? What do you need in the bearish setup? What is the recipe? Can someone lay it out for us, please? The recipe for a bearish trade. You're right. Yeah, bearish engulfing. You are there below the 20 EMA line. What needs to be? What else needs to happen? Remember, you can't just buy a bearish engulfing below the 20 EMA line. It goes this way. Price is in a down, sorry, the 200 SMA line is sloping down, okay? The 200 SMA line is sloping down. The 20 EMA starts to trend below the 200 SMA line, and then candlesticks start to reject below the 20 EMA with the bearish engulfing candles. That is your trade. And let's take a look at it. You see right here, bearish engulfing provided beautiful red candle. The same massive green candles we were seeing when we were looking at the bullish cases, we're seeing them for the bearish cases now. Then another one right here, bearish engulfing. It provided two green candles. That's good enough for me. I would have, man, I would have loved those two candles. So yeah, that's what I'm essentially trying to explain here or show you. Um, and yeah, that it's as easy as that. Once the market starts, let's say trending down, let's say we start to deal with the downtrend markets, and you guys have seen market has been downtrending for several days and we're weak. I want you guys to pay attention to the same setups here, okay? Look at the slope of the 200 SMA line. Look at the 20 EMA line, where it's at, whether it's below that sloping 200 SMA line or above it and so forth, depending on how you're seeing it. Trade it that way. Hopefully I didn't confuse you guys there. But what I'm trying to say is, like, if the slope is down, right, and the 20 EMA line is below the 200 SMA line, keep in mind, team, you do not just buy a test at the 20 EMA line. You need to see breakdown confirmations, okay? You need to first see a rejection. So you can't just say, oh, I'm going to short it right here because we tested the 20 EMA line. No, 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 no. That's not how it works. You need to see reactions. You react to that reaction, basically, and you'll bank on it. I promise you. I promise you that. So you can see, again, once the 200 SMA line starts getting back down below the 20 EMA, sorry, once the 20 EMA line starts getting back down below the 200 SMA, printing bearish engulfing candles, it just sends it down, sends it down, sends it down, and so forth. So if you entered on that candle there, exactly not the best setup. So you can see bulls were still fighting, bulls were still fighting. But once the fight is lost, and a clear support level has been lost, look at all that downside, man. Look at all that downside. And that's for later. For those of you, once you become more advanced, you can learn that stuff later on. What is your momentum crossover? I see yellow and red arrows. They're simply, you see that one right there? They're simply, they're momentum indicators. So they are momentum indicators, and it just tells you, hey, there's a heavy momentum coming in on the downside, and that's what he's trying to portray there. Yes, it is in Thinkorswim, and it is on the default one. Um, and yeah, I honestly haven't done any changes to it. Like I said, I had it on and I was studying it for a while, and I really loved it. I loved it because it was so accurate, and I stuck to it. So for those of you that are on Thinkorswim, for those of you that already have Thinkorswim, you can go to Discord and on Discord right here, you click on the pinned messages. Click on pinned messages. These are my TOS scripts. So this script right here, if I import that particular script there, I copy the text, right? I copied let's go back here. I basically copy that text, and then I go to setup at the top right corner, and then I go to open shared items. I click on that. I paste it into there. So I click on CTRL and V at the same time, letter V, and it pastes it there for me. I click on preview, and then I name it. Import item as you can name it for yourself, Harish 2025 or EJ Trades 2025, Rima 2025, Luffy, and so forth. And yeah, you can name it your setup. And then the other two are the S&P 500 stocks, and then the SPDR, the sectors. Now, team, this is where things get even better, okay? This is where things get even better. Now you guys see how we have this beautiful scanner. What I also have is I have this SPDR, the sectors there, the S&P 500 sectors. So all of these stocks that are showing up, they're part of these 11 sectors of the economy. For example, XLK, if we go to XLK and analyze it, we have Nvidia, Apple, Microsoft, AVGO, PLTR, MU, AMD, Oracle, Cisco, IBM, LRCX, and so forth. These stocks are part of it. We go to XLI, GE, CAT, RTX, Uber, BA, GEV. So you're going to see these stocks being up depending on those sectors. So if this sector here is leading, you see how this sector is up 1.3%. Look at the stocks that were part of it. You got Oracle, WDC, MU. These are all part of the XLK sector that I can recognize. AVGO is also part of it. Um, so what I do is like I study the sectors as well. I don't just study stocks. When I see stocks up here and I recognize them, I go and look at their sectors. I look at their sectors and then I say, okay, what is exactly going on? Why is it that why is this sector getting momentum? Okay, because what I'm essentially trying to do is obviously we're already seeing the visible demand. When you see that bullish engulfing above the 20 EMA line on this XLK chart, and we're above the 200 SMA line, what does that mean, team? This means that once they break this downtrending line, it could be it can put an end to that corrective wave and resume the primary uptrend on tech stocks. Okay, so if I see that, and then I can also figure out what the catalyst is for XLK to start going up again. This means that have even a better conviction compared to others. So this is where I always look for catalysts. When I see a random stock up there that is leading, I don't necessarily go and buy it. I try and see if I can connect it to the given sector that is also showing strength, that is also leading within the 11 sectors of the economy, getting that whatever it may be, seasonal rotation, whatever it may be. So looking at XLK, it's above the 20 EMA line, printed a bullish engulfing. Once they get above that, above 147.26 on Monday session, I'm expecting some heavy moves within those tech stocks that we just listed. So, and the beauty is, like I said, a lot of times those stocks have shown up exactly on my scanner, which makes it even easier, and I really love it. It just they complement each other so well. Let's take a look at XLI, the industrial sector. You can see printed a bullish engulfing there on that day. And I promise you, if I pull up stocks that were part of XLK, that were part of XLY, so let's take a look at GE, CAT, RTX, you'll see they very well align with that. So if you identify that on the sector, then what you're going to do is you're going to go and analyze the stocks that's on this list. For example, let's go over Caterpillar. Now, Caterpillar, obviously not the best setup. It had already ran up, which I probably would have been a little bit cautious about. So let's take a look at some other ones. Let's take a look at GE, which was also part of it. We can see GE was above the 20 EMA line, sorry, above the 200 SMA and above the 20 EMA, and you could have gotten some nice trades in. Let's go to a few others that let's keep on looking until we find higher probability setups. Let's go to RTX. RTX, not exactly the best setup. It's still consolidating. Let's take a look at more. Uber. Uber, I wouldn't have traded that one because it's not above the 20 EMA. And we'll just keep going down the list until we find some that are. Oh, BA. BA's one. Look at BA. BA just looks great. I mean, oh, you know what, team? I messed up. I was looking at a different time frame. No wonder they didn't look good. There we go. There we go. Now it matches up. Sorry, I was looking at two different time frames. I gotta redo them. I was looking at the 30-minute time frame instead of the daily time frame to match the same setups. Now let's go back to Caterpillar. Oh my freaking God, look at that, team. Look at that. On the day that bullish engulfing happened, on the day that bullish engulfing happened on the daily time frame for XLI, the industrial sector, and you would have identified that on Caterpillar above 588, you would have entered at 588, you would have already been profitable for that day, and then another massive gap up all the way to 621. 621, man, in just day and a half. You would have caught this beautiful trade on Caterpillar. Now let's take a look at RTX, GE. Oh my freaking God! Look at where those candles are happening, team. It happened right at the 20 EMA line. Absolutely beautiful. Let me just remove the 50 SMA line so it doesn't confuse you guys. Look at this one right here. Bullish engulfing at the 20 EMA, same thing. Absolutely beautiful, you guys. I'm telling you. I'm really telling you. It's so good. It's so good to just apply the 200 and the 20 and start from there, and you got a really great system. This system is not going to go obsolete. You know why? Because what are we doing exactly that's going to go obsolete? You're telling me stocks are going to stop moving leading the day session? There's no way this is going to go obsolete because you got, we're basing it off of percentage change. We're in the forefronts. We're looking at stocks, and to interpret it towards, we're looking at where smart money enters. And how do we know smart money is entering? Well, those demand candles, those bullish engulfing candles, those demand overwhelming supply candles, to really simplify it. So, uh, yeah, that's you can look at the industrial sector, and you would have caught some really nice trades on those stocks that we looked at. XLY, let's take a look at consumer discretionaries. Now, I want to show you something, team, so that you guys don't say this is after the fact, or it doesn't discourage you that I'm saying this after the fact. I'm going to type XLY in our chat search box. Look at that. If you go back to January 8th, you see me talking about XLY6 consumer discretionary. Looks like I butchered the spelling. Consumer discretionary stocks are doing really well today, getting a good amount of rotation inflow. These are the stocks that are part of the sector's holding. Amazon, Tesla, HD, McDonald's, BKNG, Lowe's, SBUX, blah, blah, Starbucks. You go down the list and so forth. And look at that, above the 20 EMA line, broke the resistance. And then in the last 2 days, we've been catching beautiful upside on that sector. Now, let's take a look at the stocks that were showing up on that. Oh my freaking God, team, look at that. Harris, you made some beautiful profits on Amazon, right? This is why I shared Amazon with the team, because it was above the 20 EMA line, above the 200 SMA, and look at it. It played out beautifully. We go to We go to the what else? Tesla's also part of it. Tesla, that I wouldn't have traded it, obviously, even though it was I actually missed the trade. I wanted to buy it at the retest of this rising trend line. We had been waiting all the way from 461 down there, and I personally missed it that morning. But yeah, it was the high probability trade anyway, so not much. I'm not stressed out that I missed out on it. But if you go to all the stocks that are within that sector, McDonald's, TJX, and BKNG, you keep going down the list until until you really find these setups. And you see this one, not really the best because uh, the slope is not right, obviously. So you would want to let the stock play out a little bit and it'll totally be worth it because look at this setup team. It's been consolidating for almost 2 years. And once, by the time it gets to 317 on this weekly chart, that daily time frame 317 would be around here, and this means that by then the 200 SMA line will have sloped up and the 20 will have sloped up. It will be a better trade. So if you do miss out, it's all right. It's all right to just pass over setups because they're going to set themselves up better for you to trade in the future. Let's take a look at TJX. Look at TJX team. Absolutely beautiful. Demand candle above the 20 EMA line is getting ready for an expansion. We take a look at, we already saw Lowe's printed that massive demand above the 20 EMA line, which is above the 200 SMA. It played out beautifully with a 4.29% up day the following session, all because you identified the sector, and you went and looked at the stocks that were within that sector and that had similar setups where they were printing demand candles above their 20 EMA lines. This is where I will end today's session, team. And let's see. Harris said, look at TDY on the 5 minute time frame. You said. So Harris said, in the 5 minute, uh, what does this tell us? Well, just looking at this particular chart, I can see us being a little bit overbought from the 20 EMA line. So obviously, I would not buy up here. I would more be inclined to buy exactly when that 20 EMA line happened right there. So, sorry, that bullish engulfing at the 20 EMA line. Looking at the 5, let's see. It could be a good trade. It could be, but I try and stay away from these type of stocks that have already made their run ups. But keep on looking, keep on learning this, Harish. Don't be discouraged, please. I always share my thoughts. I've learned to always share my thoughts truthfully because that will be a much better learning to the team than me telling them, "Oh, the setup doesn't look the best. It's already run up, but it's still good. You can trade it." If I say that, then what happens is the setup goes wrong and they're going to be discouraged. So I just tell the truth. Thank you so much for attending, Charles. You are an absolute awesome soul. And I also thank you so much for being part of the fund. Thank you so much, Terry. My pleasure, everyone. I hope you learned something powerful. Please, 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 I beg of you, add the 200 SMA line, add the 20 EMA line to your chart. I want to start seeing it in the chat room. I really would like to see it in the chat room. Lavanya, thank you so much for being here. Greatly appreciate you. Thank you. I do remember you from the mentorship classes. Just got on in the last 10 minutes. I'm so sorry. TOS is not available for Canadians. Do you have a? I do not have a TradingView version, Luffy. Um, However, if you start off with the 200 SMA line, you add the 200 SMA line, and you add the 20 EMA line, I will work with you in the chat room or privately through messaging to help you get the rest of the indicators set up. Now, for our next session, I'm going to do another session on Friday, but I will repeat the same things that we talked about today. However, for our next session after that, we're going to focus on how I use the volume, how I use the TTM squeeze, how I use the RSI, and everything else. It's so true, Aki. It's so so true. The beautiful part is, it simplifies it a lot less for experienced traders. For less, sorry, it simplifies it so much for less experienced traders. Yet it's so damn powerful. It's all there is to learn. There's not everything else that you learn really just reinforces your understanding further into the specifics, the details, and we have all of that. If you're part of the mentorship, you have access to this. If you don't have the new, I'm going to upload it to the website, so don't download it just yet. Download it later tonight. I'm going to update it. If you download it now, it'll probably have less than 400 slides, but the new one here that we have has more than 400 slides. And the reason why is because I've added the bearish engulfing, the bullish engulfing, basically RSI strategies. I've added that, and I think I also added some more on other stuff like the TTM squeeze and all of that good stuff. But yeah, we'll talk about that as well. Thank you so much, Harish. You can download it in the log into the website with your credentials that I sent you in the email when you signed up for the mentorship. Log in with those credentials, and then go to the notes section of the website. There's a section called notes. Click on the notes, and then it will download. Um, will it download our original version automatic? Update our original version? Unfortunately, not, Charles. You're gonna have to download it again. But make sure you guys download it on your phone and computer so that if you're ever bored, you're sitting somewhere, you're waiting at a DMV line, which sucks, or anything, you got to renew your license, you can pull it out and just study it, go over it, look at examples, use it as a reference during trading, and so forth. It has been a pleasure doing this session, team. Always, always my honor. And I hope you all have a wonderful rest of the Saturday. Without taking up much of your time, let's end the session here. And yes, there will be a recording of this. There will be a recording. And yeah, let's catch up in the chat room later tonight. You guys go ahead and make sure, please, you do apply what we learned today. I would like to see it in the chat room. And